What is up, team? Chuck with Traders War Room, and I'm back at you with another video. This is a tech video, and we're going to talk about the difference between stocks and options and why you should be buying one over the other in the current market. What I need you to do right now is hit that like, share, and subscribe button, and I need you to come along with us on the journey and check the description tab out. Tons of tools and tidbits to make you a more successful trader. Now, if that sounds good and you're ready to rock with us, then all I got to say to you is follow me and let's go to war together. Traders War Room, let's get it. Today we're going to talk about options versus shares. What's the better trade in this current market? But first, let's check some recent alerts and show you exactly why you should come join Traders War Room. We have a variety of alerts, and every single alert gives you an entry point and an exit point with a time and date stamp so you know it's for real. Check this one out on SPY. In at 184, out at 275, easy peasy. We do a lot of swing trades over at Traders War Room, just like Foot Locker, guys. We got in at 240 and we went ahead and rode the momentum all the way to 770. It doesn't get much better than that. And we don't just do the expensive ones, we got the cheap ones as well. Check out this one for 40 bucks. We went ahead and hit the 2x on this one. Easy money, guys. We do this consistently over and over and over again. With all the bangers and the consistency that we're putting out, are you all feeling me yet? If so, then all I got to say for you guys, quit wasting that money that isn't making money. Join today. The links are in the bio, traderswarroom.com for more information. When starting out, probably the most thing that investors get into are stocks at the very beginning, because they may not have heard options or they don't quite understand options. And so stocks is just kind of a natural progression of things that we get into. And most of us get into blue chip stocks like Tesla, Apple, and Amazon. And since these are expensive stocks, but we've heard of them, we utilize the products, we like the momentum and all the buzz, we get into, with a few shares of it. Maybe we buy one Tesla because we can afford it, buy two Apple, and maybe 3 or 4 Amazon. And then that starts off our journey into investing and trading. But the issue with these is that they're expensive, so that we can't go very deep. Plus, they don't always move very quickly to give us a great opportunity to make some decent money, and we have to wait for our payday, which isn't a bad thing. But what if we want to actively trade while we invest so that we're able to make money with our stocks long term, but we can also make some money short term and not have to wait a whole long period of time to get a decent return? Enter the idea of going ahead and trading options as well as stocks. So the big difference between stock and options is that options are derivatives of equities, in that the stock represents shares of ownership in an individual company, while the options are contracts that the investors have, and they purchase the right but not the obligation to those particular shares. And basically, when you think of it, you think of shares are individual. So if I buy one Apple, one Tesla, one Amazon, I own that Apple, that Tesla, that Amazon, regardless whether it goes up or down, sideways, whatever, I own those shares. When I buy an option contract, I am buying controlling rights, but not obligations to those particular shares. So if I buy a Tesla contract, I am controlling 100 shares of Tesla. If I buy an Apple contract, I'm controlling 100 shares of the Apple. And if same thing, so on and so forth. So that's the big term between the equities and the derivatives. And that's what we have to understand when we're trading these particular disciplines inside of the stock market. Now, before we go any further, we do have to say that everything is a gamble and a risk, okay? So there's no quick, this is going to work over that. We have to understand that everything has a type of potential and a type of risk that's associated with it. And so before you go into investing into stocks and options and things of that nature, you need to look at your risk management and your risk threshold, and you need to make an idea of what you can potentially lose to gain and lose to risk as well inside of these things. And so for a lot of times when you go into individual stocks, the companies, the Tesla, the Apple, the Amazon, they're a little bit more risky than going into, say, an index fund that covers those particular, like the QQQ or the SPY or things of that nature. Remember, stocks are risky, and individual risk tolerance and threshold must be considered at all times. The best way to be successful in all aspects of trading and investing is to have a well-balanced portfolio with a healthy mix of both stocks, options, and inside of those to include the ETFs that are a little bit more safer of a bet, as long as you're not getting into the leveraged kind of ETFs. Now, looking at a chart like this can give you an idea of what type of strategy you want to employ on your particular investment journey. Now, with stocks, again, beginners and long-term investors, that's bread and butter, right? Now, options, they give active traders some flexibility, and that's the appealing part of the options. Some drawbacks, of course, you got risk and fees associated and effort along with the different trade strategies and risk that's associated, because we know that if in stocks, you buy a stock and a share, you have that until you sell, okay? Whether it goes up or down, you have that. Options, there's expiration dates associated with it, so it's a little bit more of a risk, because if your stock isn't moving in the direction you want it to go by the expiration date, you're going to start losing money, and at some point, the expiration date is going to come, and then that is either going to be assigned or you're going to be out of money on that particular trade. So definitely, we always want to secure when in the green on option strategies. And of course, we know the difference between equity and derivatives. But really, when we're talking about options, we're talking about the flexibility, okay? So most people, when they start out, they don't have the account size that they can short stocks, all right? So, we're in a stock, right? And say we get an Apple, and Apple takes off, and we're like, yeah, man, I made $4 per share on this particular move, and then all of a sudden it starts tanking, right? And we're starting to lose money because our entry was, say, 170, and now we're at 165, and we're $5 down per share in it, right? And we don't have the account size, or maybe we're not a margin, so we can't short the stock and make money off the downside. Well, that's where our options come into play, where we can play the momentum while we allow our underlying assets or our stocks that we have to just kind of do their thing, and we're investing. We can play the option strategies and make money off of the downtrend or the uptrend or the sideways trend, and that gives us the flexibility. Also, we can go into leaps, which are further out contracts where we're pushing out 6 months, a year, 2 years, and we can go into spreads, which kind of give a little bit more of an advanced idea on this, and we can talk more about that at a later time. But the big one that most people enjoy when they first start out in options is having the flexibility to go with calls on a bullish trend and puts on a bearish trend. And that's the important part and the main difference between investing in stocks and in trading in derivatives. And just like we were talking about, if you're looking for a straightforward way to start investing, stocks is the way to go, okay? And you want to stick with blue chip stocks, good company stocks, and things of that nature. You want to get in a little more risk that has a little more potential for growth and moves. You can go into the penny stock area where you got the growth sector and the potential for them to continually move up in a dramatic fashion, and you can make some money long term. But that is usually how we start off as beginners, and then once we get a little more advanced, we understand the market, we understand economics, we understand the movement and what makes money move and what makes sentiment move. We can start dipping into the derivative side of the house and start making money on option contracts while our stocks are just kind of doing their thing over the long term and hopefully potentially making money for us long term. So basically, we invest in stocks and we trade in options, but we can also trade in stocks. However, they may not offer as much near-term compensation as options. Now, there are exceptions, high volatility names such as we saw with the Bed Bath & Beyond craze, the AMC craze, GameStop, and then you got some penny stocks. And whether they're the true pennies that are under $1 or they're just small cap industries, they can offer some great compensation based off of volatility. However, you have to catch them very early and ride the momentum. But options give us the flexibility so that we can catch some decent returns on some of the bigger names that aren't moving as dramatically. Essentially, when we're trading in options, we are looking for a more tactical approach, and that definitely falls in line with traders' war room mentality, where we want to attack, conquer, and destroy the marketplace, and we're always looking for a tactical advantage. And that's kind of what we were talking about just a second ago when we're looking more of a tactical approach with a smaller investment requiring and having flexibility to regain both sides of the spectrum, whether we're going up in the stock or whether we're going down in the stock. And if we get into more advanced options, we can even play the sideways movement. But that's the flexibility that we want to have to be able to make money while we're allowing our stock shares to just mature over time. We can still play the option game and make money going both ways depending on what the market trend is giving us. Another advantage of utilizing option strategies is that we can hedge our positions in stocks. So example, like we were talking about earlier, we're in a stock and the stock has dipped, right? And we still want to position ourselves and stay in that name, and we're buying on dips, doing dollar cost averaging. We can trade options to hedge the potential short-term loss that we're seeing in the underlying stock by playing the momentum, whether we're going with puts on a downtrend or going calls with a bull trend. We just are looking at the direction which the stock is trending. We're looking for the high and the low areas of the movement so that we can kind of gauge which direction we want to do our option contracts, and then we can look at the different time frames, because as investors we're not so worried about minutes, hours, things of that nature. We're more looking at days, months, quarters and stuff like that. But in trading, we're looking at the shorter term where we're actually trading off of 4-hour charts, 1-hour charts, 30-minute charts, 15-minute charts, etc., and we can follow momentum and get compensation near term, while once again, like we said before, we're allowing our underlying stocks to mature along the way. Now, there are some drawbacks of options trading. And like I said, most beginners, we start off with stocks, and then once we get a little more advanced, we start dipping our feet into the option trading. But this requires you to learn a new vocabulary of terms, a new idea of strategy, and also we have to be more hands-on with our trades because the options do have expiration dates. We have to understand the movements, and we have to be a little bit quicker to cut losses, and also we have to be quicker to get into the trade and pull the trigger. So in conclusion, making the decision whether you want to trade options or stocks, or maybe have a combination of both, which I highly recommend having both arsenals at your disposal, is a personal decision, all right? And it's basically based off of your trading personality and your trading style. Like we talked about before, beginners typically start out with the stocks and usually start out with some blue chip stocks, dabble into the penny stock range a little bit and the small caps because they're higher growth potential, and then start looking at options once their stocks tend to kind of subside a little bit or start consolidating. You don't see as much dramatic movement. Then we want to start trading options so that we can capitalize on some of the less movement in the underlying stock, but still get some movement on volatility within a particular range of prices. And that's where the option flexibility comes into trade and where we can definitely make some decent money. So let's look at an example, and I'm going to use Robinhood just for simplicity because it is a very extremely easy platform to utilize. But let's look at an example at how trading stocks and then trading that particular derivative of that stock would be beneficial, and look at the pros and the cons of both sides. So we're going to use Tesla for this example. Tesla is a good stock to trade as it's extremely volatile, and any given day it can move between $20 and $80. And so we like Tesla trading. But looking at the chart on how it acted on Friday, we noticed that it came out the gate, had some volatility and some consolidation, and then started taking a dump, found its level at the bottom, and then started its ascending climb back to trying to close green on the day, and then kind of consolidated out into after hours. And so now the question is, what is the better option, to go ahead and trade shares on this one or to go ahead and trade options on this one? So right here I have our open price and I have our high price and our low price. And so when we look at this, say we were in and caught Tesla on a dump and we were able to catch it on an exit on the high, we would be able to have a difference price range on the Friday of $33.35. Now, this can also go if you have a margin count, you might be able to short. So that goes into saying that you can also short the stock as well. Now, for those of you that have trouble shorting stock, or this is a little too expensive for you to really trade shares on this, that's when the option comes in and gives us that flexibility so that we can still ride momentum regardless of whether the stock is doing well or it's not doing well. We can go ahead and ride the momentum in the direction it's going, and we can make some money off the trade. So let's look at one example. We got a Tesla put, $820 put, expiration date being August 26th. And what we're looking at is it closed at the mark at 368, but I really want to focus on the high and the low just to kind of give you guys the difference. Remember, trading the shares basically from the high and the low, we were looking at about $33, $34, right? But when we're looking at the option contracts, trading from the high and the low of the option strikes, we're looking at a difference of $310, okay? Mind you, that was, depending on where we enter and exit and stuff like that. But what I want to get at you is the potential, right? So the potential for one contract compared to profit off of one share is astronomical. And that's why options are so popular, is because it's a little bit more bang for your buck and you're able to make more dramatic profit on a particular individual trade than you could with an individual share. Now, the same thing on the call side. For demonstration purposes, I picked contracts that were within a price range of about $300, $400, depending on your, particular capital investment that you have available, and also your risk tolerance will depict on what type of contract you would go into. But I'm kind of ranging it off of, something that is of value and worth, but doesn't break the bank in most people's portfolios. So between $300 and $400 something dollars, that's where we trade at. And once again, we look at the high here on this 970 call. The high is 730, the low was 380, which is a difference of $350. And again, our underlying asset of the equity was only a push high and low of a $33, $34 difference. So definitely you can understand why options are extremely popular. It's just like we said previously, just more bang for your buck potentially. However, they are a little more riskier because you have an expiration date, so the contract will go to zero if it isn't running in your direction and you don't secure it for profit. All right, team, that's it for the video. I hope you found some value and worth in this particular tech video and a little bit of a deeper understanding on stocks, options, and some pros and cons along with both of them. Up next, we got hot upcoming TWR products and services. Team, I'm telling you, we have so much to offer for every single type of trader out there. We don't care whether you're a beginner, intermediate, or advanced. There's something on Traders War Room that you can find value and worth of. Whether it's our real-time buy and sell alerts, our algo trade signals, our bell-to-bell live trading, the one-on-one mentoring, our live classes, or a fantastic community, something for everybody, every budget. So come and get some at traderswarroom.com. Book a one-on-one mentor session with one of the Traders War Room analysts. We help develop skills, gain confidence, receive guidance, refine strategies, getting a pro perspective, and exploring new plans of attack. Elevate your game today and try one out today. So book it at traderswarroom.com and come and get some. Purchase an upcoming class or see what we have in our repository. We truly have something for everybody, and whether it's a class on charting or a class on indicators or a class on spreads, we have something for everybody and every type of style. So come check out our inventory and see what classes we have upcoming. And finally, if you're truly serious about learning to trade and invest like a professional, then check out our formal course. It's 6 weeks long, 2 classes per week. The registration is open and class starts 30 August. This is an in-depth tradings options fundamental. From the cradle to the grave, you are going to learn everything from the start to the end of options trading. We're going to take you from a good trader to an elite trader, and you definitely, if you're serious about trading, don't want to miss your opportunity. So check more at traderswarroom.com, and we hope to see you in the class starting on 30 August. And that's the entire video, guys. Like we said before, we want you to quit wasting that money that isn't making money, and we want you to join Traders War Room today. The link's in the bio. Check us out, traderswarroom.com. And from all the staff at Traders War Room and our official Battle Buddy Rocket, I want to say thank you for coming along with us on the journey. And as always, remember, we look at the stock market like a war zone. Stocks are sector, those are our battles. We do it together as a team. Attack, conquer, destroy, and we're always going to war. If that sounds like you can get down with it, then all I got to say to you is follow me and let's go to war together. Traders War Room, check us out.